Toshi's white paper came out in 2007? It's still 17 years. We are still about 5 years away, or maybe less than that, actually, um, from having that pivotal moment where it's like the chat GPT moment of blockchain, right? And I feel like I've started seeing a semblance of that in the last, I have to say, about 12 months. As someone who's been in this industry for like over 7 years, I would never have said that before. I personally believe that in the next 2 years, we will have that moment coming up very soon, which would again, be almost close to like the 20-year anniversary of the white paper coming out.
None of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by WAGMI Ventures or any of its affiliates to buy or sell any securities. Hey WAGMI family, Benga here with another WAGMI Ventures podcast episode. Today we're switching things up. We have a member of the WAGMI Ventures family in the hot seat, Ash Arora, the youngest partner at LocalGlobe VC, a $2 billion AUM pre-seed and seed fund from the Phoenix Court family of funds, investing in top outlier founders in crypto, and topping the list of the most successful unicorn backers in EMEA. Wow. For anyone who is new, this is the WAGMI Ventures podcast, where we do snapshots with interesting builders and founders across crypto, AI. Check out wagmiventures.io to learn more about the syndicate behind the podcast. All right, let's get the show started with Ash. Ash, welcome to the show.
Benga, thank you so much for having me.
Yeah, absolutely. This is quite an honor. We don't have too many crypto investing royalties come through every day. So thank you for honoring our request here.
Royalty is a stretch, but flattered with the kind words. Extremely excited to be here. Have been a huge fan of WAGMI for such a long time now. Have been a strategic advisor for such a long time to WAGMI as well. So I think it's high time I was asked to come here.
Yeah, no, you're absolutely right there. And we're just going to jump right into it here and start with your journey into crypto. We know you started at Citibank, so a lot of TradFi background there. We share that in common.
Yeah.
And then pivoting into crypto. Talk to us about your journey.
Yeah, so it's a very common question that I get asked, given my track record is very different from what most investors or blockchain investors or even like VCs looks like. I started out at Citi in investment banking, hated it, switched over to markets fairly early. In capital markets, within 3 months, I was asked to do a research project on Bitcoin. The idea was to see whether it's like a viable asset class for Citibank to look into, invest it all into. This is back in 2017 summer. I spent 3 months looking at it, built like a huge amount of conviction and understanding of the blockchain technologies, especially focus on Bitcoin and Ethereum. Used to be, I think, one of the only non-tech attendees of the ETH developer calls, which was fascinating because I would be the one asking the stupidest of all questions in that room. And yeah, after 3 months, Citi threw it out the window. They were like, this is too speculative and unregulated. We are not going to do anything with it. But I had gone so deep in the rabbit hole, I invested my entire Christmas bonus into Bitcoin and Ethereum and 2 more tokens that shall remain nameless for my own lack of embarrassment reasons. But yeah, so that's basically how I got into it. I started my crypto trading firm on the side with a couple of friends, and we did algorithmic trading strategies with crypto starting 2017 till about a few years ago. And yeah, since then, I have been a very avid supporter of the blockchain technology adoption, as well as exceptionally creative ideas that get built in this industry, which may or may not have high P tokens, but at the same time are creating true value. So it's been a little over 7 years now, and I'm here to stay.
Wow, that's quite a ride, 7 years.
Yeah.
I always think of investors as innovators and founders themselves. I think I may have mentioned this before, because you really have to put yourself in the founder's seat to see the vision and see how it all plays out. Can you speak a little bit about what has informed your view of the world in investing?
Yeah, that's a good question. I think it depends on the stages where you invest, right? So if it is pre-seed and seed, there is a huge amount of emphasis that you make on the founder. You try to understand them. You try to get under their skin. You understand what's their ambition, what drives them. And then you see how quickly they are able to get to a first principle thinking level of understanding where to build, what white spaces to focus on, what problems to solve in the specific vertical where they clearly have found a market fit, where they have experience, they have network, they have credibility. They have pretty much all the right ingredients to build a very successful company. So, these are some of the things that you'd look for at that stage. But then, where to allocate time when you do Series A and above, or even till like B or C, is more to do with this business is successful. They have certain traction. They have clearly found a way to win public approval if it is a consumer tech, or businesses are loving it and retention is very high if it is a B2B. And from that lens, then I think after that, it's like a point of graduation for a company after Series B or Series C, in fact, where they get to a point where numbers start mattering more than anything else. So then it's like a proper, fully structured board. There is like everything goes through an approval, etc. So then traction is a very big emphasis, but still that visionary aspect, in my opinion, remains. Like the way we invest, we do pre-seed to pre-IPO. So the later stage companies, I always have that context that, numbers are great. That's great. You have traction, but where do you see the company in 10 years still from today, even though the company is at that point 5 years old? So yeah, I think it's just every stage of the business that you get excited by different things and you look for different things in the same vertical of an industry.
Got it. You previously led $100 million fund for Polygon Ventures, connected with really impressive LPs, Sequoia, Lightspeed, Tiger, SoftBank. What was that experience like?
I mean, that's fun, right? Like my first day of Polygon, I was asking around that, hey, how do I get access to my email, Google Drive, etc.? And they're like, oh, by the way, we have to raise $500 million. So, I mean, that's not a conversation you'd like to have on your very first day of joining a new company. But it was a hell of a ride. I got to build out the entire team and just worked with some exceptional people. They are absolutely brilliant in their own right. And majority of the team that we recruited was in the US. And yeah, we ended up raising $500 million from these global LPs for the company, this into the $500 million fundraise that we were doing. A lot of it was obviously used for M&A as well. And then this fund was like a corp dev fund, right? Like a standard corp dev fund, where we obviously wanted to make money on it, but we also wanted to support BD on their initiatives. Hell of a ride. We ended up backing 5 unicorns out of it, which I think is exceptional for a corp dev fund that has like a dual strategy. But yeah, that was a hell of a ride. We branded from Polygon Corp Dev or Polygon Investments to Polygon Ventures and now P2 Ventures. During my time there, the website was changed so many times. Our fund strategy was changed several times as well. It was quite a unique experience and I got to learn a lot.
Yeah, I can imagine the shock and the look on your face when you were told you had need to raise $500,000.
It was really fun. Like I'm asking about, hey, what's our health benefit? And I'm like, oh, by the way, you have to raise $500 million. So this is the tracker. These are like the 75 VCs that we need to speak to and convince them and build like a data room and stuff for internal document collation so that we can share it with the VCs. So it was really fun experience.
It was baptism by fire.
Yeah, and exactly. And the irony of it all was we didn't really have a proper legal team. So I was the lawyer as well while we were onboarding like an external law firm to help us with the fundraise. And I'm not a lawyer by profession. So I learned so much about legal things. Like today, my fund legal loves me because I rarely ask them questions. I just know a lot of those things already. So it was extremely creative as an experience.
Wow, fantastic.
Yeah.
So I'm going to now switch to everything LocalGlobe. I mean, LocalGlobe needs no introduction for a lot of the crypto native family, but for our listeners and our audience, in your own words, tell us, who is LocalGlobe VC?
Yeah, so we are one of the oldest and largest early stage VC funds in EMEA, in Europe. We started out in 1999 as a family office. We did the seed for Twitter, Figma, Robinhood, TransferWise, Canva, etc. So we have the highest number of unicorns at seed, like you said, bagged in EMEA for any seed fund. And we are, I think, number one for 8 or 9 years running now. And now we have $2 billion in AUM. For blockchain specifically, we love to do pre-seed and seed as a lead investor or just be participating investors in Series B from our growth stage fund. That's pretty much where I want to focus our efforts in blockchain specifically. We are entirely based in London, but we cover all of Europe and we also do strategic deals in the US. We have 5 unicorns in our portfolio today in blockchain. So that's Copper, Sorare, Improbable, Talos, and Avail. and about another, I would say 12 or 13, maybe more than that, companies in the blockchain portfolio as well. So yeah, that's a pretty good conversion rate. We've been active. I mean, Improbable happened in 2013, I think, or maybe before that. So we've been very active blockchain investors for a decade. But we stay away from hype cycles and like sort of meme coin token tradings, which I think, given the fact that we have a fiduciary responsibility to our financial investors, we have to maintain that. It's not a balance sheet or like a trading fund spin out VC. We do sector agnostic investing. So our like momentum and our outcome always is financially driven, and we are not short-term backers. We like to hold a portfolio company for a minimum of 7 years. So we love to be there for the founder throughout that company building journey, and we need something more substantial and very high utility for us to want to lean in.
Gotcha. I think you answered a little bit of what I was going to ask next, which is around the investment philosophy.
So, yeah, I think investment philosophy, like I mentioned, would be more along the lines of you need to be an extremely long term thinker. You need to build something that is very different from what we have already seen in the market or what the market currently has the potential to do. Like, I should get goosebumps in the first pitch meeting, right? That's literally my bar. For me to think, oh my God, I never thought of the world this way, right? Another thing, so I don't just do blockchain, I co lead all of our deep tech investing now across the funds. Yeah, so one of the things I say at every panel, I was just on an AI panel last week with NVIDIA and Anthropic, and I was asked exactly this question. And I said, I should get goosebumps, and it should feel like it is out of one of the sci fi movies that came out in the 80s or 90s. Because now we have the technology to build that product, build that idea, and make it a reality. So it needs to be extremely creative, very thoughtful. You need to have really unique insight that I don't have. And I feel like I need to be the stupidest in the room. Otherwise, I won't enjoy the meetings with the founders. So please come and make me feel extremely stupid for not thinking about or for not knowing certain aspects of an industry that could be extremely high growth, venture scale, massive businesses that could change the world.
Wow. Hey, everybody. Quick thing here. We're excited to announce WAGMI Advisory, your home for all things fundraising, hiring, and partnerships. This is all about supercharging your project with the WAGMI network, consisting of over 20,000 executives, investors, and builders in crypto, all ready to come alongside your project to help it succeed. Get in touch at team@wagmiventures.io to learn more and figure out if WAGMI Advisory is the right fit for your project. Let's get back to the show. I think generally that makes a ton of sense, and that's how you sort of like filter for what a project or a successful project is. And even in this regard, I think a lot of what you guys have invested in emerging tech is, for crypto especially, is the base layer, so infrastructure. There seems to be a strong focus of that in your portco. What is the thinking behind this approach?
Yeah, that's a really good question. So I've been saying this for a very long time. Blockchain is very similar to TCP/IP, or even for that matter, AI now. So TCP/IP came out in the 80s, but still the World Wide Web came out 20 years after that, maybe even the 70s, actually, I'm forgetting the year. But it took 20 years for World Wide Web to be created, and then the internet as we know it today to actually have utility for end-to-end users. Same for AI. Big data and ML research has been going on for more than 20, 30 years, since the 90s. So it takes a while for every single industry to mature and that technology, that potential technology, to become so widespread that it is undeniable in your day-to-day lives. Blockchain, Satoshi's white paper came out in 2007? It's still 17 years. We are still about 5 years away, or maybe less than that actually, from having that pivotal moment where it's like the chat GPT moment of blockchain. And I feel like I've started seeing a semblance of that in the last, I have to say, about 12 months. As someone who's been in this industry for like over 7 years, I would never have said that before. I personally believe that in the next 2 years, we will have that moment coming up very soon, which would again be almost close to the 20-year anniversary of the white paper coming out. So I think we treat technology as a wave when it can be a paradigm shift. And it's like a beginning of a new era where, let's say, trustlessness is baked into every single activity that human beings conduct. And there is no need to trust each other. There's no need to verify counterparties when you're transacting with anything. So to me, one of the biggest impacts that blockchain will make would be in financial services. And the infrastructure, and I'm going to make a bold statement, the infrastructure of that doesn't exist today. It doesn't exist at L1s, it doesn't exist at L2s, it doesn't exist at data availability, it doesn't exist anywhere as a full stack solution. If I compare something very simple,
That is
something
pretty
like,
bold.
but it's true. I have tracked it, right? Like we did the pre-seed for Wise. It is one of the biggest and most used cross-border remittance product in the world. And I am an Indian immigrant living in London. I've used the product to send money back home and it's flawless. But if I try to do that with a stablecoin Rails platform, it's extremely hard. So recently, like literally a month and a half ago, I met a company that is very early. They've just raised a seed round till now. They're like a year and a half old company, and they are the first ones in the world to figure out a better UI UX than any of the existing crypto players. B, a cheaper price point than Wise to do cross-border remittance, and C, just an end-to-end experience where user at no point is realizing or feeling that they're interacting with anything related to crypto because they are using stablecoin rails in the back end. So product like that is extremely hard to come by. And I've seen that just less than a month ago. And there are so many different products I can name that I've seen in the last 3 months, which are absolutely revolutionary for the industry that go beyond the token trading side of things, which I think has just created noise and a mess of the industry. And that's coming from someone who's obviously made a lot of money trading tokens, but it's not creating long-term value. And I was young, I was waiting for it to create long-term value, and I was completely wrong. So hopefully now that I understand what it needs to look like to win big, I will be able to find the right companies to back.
Yeah, that's a very solid point you raise. The financial use case is definitely where crypto can be extremely disruptive.
Yeah.
And you are still seeing mostly orchestration layers and not the full stack. But
Exactly.
part of it could be a phased in disruption approach, especially from an adoption perspective. But yeah, I think you hit it on the nail.
Well, let's just call a spade banger. Majority of the consumer tech UI UX absolutely sucks. Like I'm a huge fan. I'm a huge fan of MetaMask. I love the team. The product absolutely sucks. It's a product that was created in the 90s, right? And even they know it. I mean, there's literally no point. This is not even controversial enough because they know for a fact that their UI UX is nowhere close to being up to the mark of, let's say, Robinhood, for that matter, or a Trading 212 or a Zerodha Grow, which are basically fiat equivalents of what MetaMask is trying to achieve. But yeah, I think it's high time that we improve the bar for consumer interaction, and we also create a nuance where not every single user needs to understand crypto and blockchain thoroughly so that they can take advantage of it. That's literally the job of a founder. You take something that's super fundamental in terms of technology, you go after a problem, you solve it using that technology by improving the life of the end consumer. That is not something that happens in blockchain today. Absolutely doesn't. It is seen as a means to an end. People create wallets and buy tokens to get rich, not to get value. These are two different things.
Yep.
It's not a problem they are solving. They're trying to get rich. So that fundamentally has shifted the industry into a direction where you're creating products which are actually not needed or are extremely subpar.
Yeah, I was going to tease you there and say, yeah, getting rich is a problem. But to your better point, it is about the utility, not so much the enrichment. Yeah, it makes total sense.
Yeah.
You talked about some of the good investments you guys have made. Robinhood, Figma, Wise, Canva, the list goes on. So fantastic diligencing and sort of picks for how you guys have returned value for your investors. Let's talk about the bad investments. I really want to hear what went wrong. How did it go sideways?
Yeah, that's a very interesting question. So, it's like when you invest in a portfolio of companies as an investor, it's similar to having kids. I'm not kidding. It's literally similar. So, if one of your kids turns out to become an asshole, sorry for my French, you basically don't get in a situation where you say, okay, you suck, go away, right? A lot of it you would internalize and you would say, okay, maybe I did something wrong. I think that's what it feels like when one of your companies don't work out. I think the lessons from such experiences has always been how important it is to back the right founder. In a lot of situations, we would back companies where they're building in a very interesting hype area. Let's say I'm in that hype area for this year is AI. So if we back an AI founder this year, they are building something super cool. Every investor wants to invest in that vertical. We found like a founder who has, let's say, like decent experience in that vertical, and promises the world to you, but doesn't have enough substance. The minute you see that lack of substance, you should run away. But as investors, we make mistakes, right? The best investors, I'm talking about the best, like the top 0.1%, as per the biggest LPs for VCs in the world, they say that the best investors are wrong 67% of the time. That basically means two-thirds of your portfolio is going to zero if you are a tier one best track record venture investor. So I think when two-thirds of your fund goes wrong, you start looking for patterns across the companies that didn't work out. And in my case, I've seen that pattern to be where the founder was extremely ambitious, talkative, but did not have the insight of chasing after the right problem, which basically means they were either not first principle thinkers, they were not high hustlers, they didn't know how to retain or find the right kind of talent. Like that X factor, that was missing in them. They were building in the right industry, they were really good founders, credible on paper, referenced very well, everything. But that X factor was missing. So since then, I think I've really started focusing on looking for that X factor, irrespective of the industry I'm investing in.
Yeah. I mean, it's important to sort of just reflect on what went wrong and how you improve that going forward. And you touched on that again, because my natural follow-up there was going to be like the lessons learned from that experience, and how that has affected your due diligence process today, and how you get a sense for the quality and future success of a product. You mentioned smooth talker, high ambition, but not really understanding the problem is one of them. Would like for you to sort of just expatiate there a little bit.
Yeah, I think I mean, there are so many different aspects to diligence, but if I summarize it, I look at it as an FPBM framework. So that's founder, problem, business model, and market in that order of weightage. Founder is obviously the highest weightage and one of the most important, or sometimes the most important thing that we look for. And there are multiple different things that I look for. So the categories go from intellectual rigor to mentality to execution to communication and like their overall market fit. The founder, like for example, needs to be an extremely good first principles thinker. They have to have a very core, unique, bottom-up problem-solving insight into why they're solving for this. Ideally, they should have faced the problem day-to-day themselves. Like it should be extremely close to them. They should not be like beholden to how people do other things. They should be very contrarian thinkers. They should be extremely self-aware, in my opinion. They shouldn't make the same mistake twice and be aware of the fact that they made the first mistake in the first place. They should obviously have a growth mindset. They should be confident, but not arrogant. Nobody knows everything. I say that I want to be the stupidest in the room because I have a growth mindset. I want to ensure that the people I work with and learn from are better than me, are smarter than me, because I'm continuously on a lifelong journey to learn. And I would want a founder to have a very similar opinion because sometimes the most junior employees teach you so much. That's like the intellectual rigor piece. And the mentality would also be, are they dogmatic about their end goal or are they pragmatic about the route there? Are they like prescriptive in any way? Also like an irrational self-belief and, oh, we can do this and I'm going to make this work. But at the same time, not crossing over the line into arrogance and overconfidence. It's a very thin line, obviously. And obviously like, open to inputs, etc. Like I can go on, right? There are about, I think, 10 things under each of these 6-7 categories that I would look for. And I need to see at least like an 80-85% of what I'm looking for in that founder for me to believe that this is somebody who's going to go and change the world.
Yeah, everything you just described there feels more art than science.
Oh, 100%.
I know it's like a balance of both, but it does feel like there is more leaning towards the art piece.
Yeah, 100%. I think there's a very good mix, honestly, right? I mean, you can say that it's a science because I can create a framework out of all of this. I can write it down in an Excel and score every founder against it and total it up and define a benchmark, and anyone above that benchmark we would back. But it is definitely an art because if you think about it, it's understanding a person without them kind of sharing the intimate details about how they feel and think. So there's this one story that I love to quote, which is about how gut feeling is a science, not an art. Have you heard of it?
No, I haven't.
So it's basically this village, some remote area of China, where a couple of American universities in the 80s went and did a study. So the thing that was happening was very baffling to them. All these teachers would take 6, 7, 8-year-old students to a barn next to the school and ask the students to pick up baby chicks, who all look identical, by the way, male and female, and look at their genitalia and segregate them into male and female. So this was an exercise they would do twice a week for 3 months. And after 3 months, the teacher noticed that the students don't even have to pick up and look at the genitalia. They can look at the face of a baby chick and segregate it into male and female with 99% accuracy, which is bonkers, right? Because they all look identical. There is no way to actually find out until unless you check the genitalia. This basically proves there's a scientific basis for gut feeling. And sometimes that gut feeling is your subconscious brain, your amygdala, which is your emotional side, as well as your core cerebrum talking to each other and telling them that there's EQ as well as IQ in what you're seeing, the person that you're interacting with. And sometimes that gut feeling serves you very well. So the best venture investors in the world will tell you, I just go with my gut, which sounds very faffy, which sounds very, hey, okay, what? No. But the reality is there is science in gut feeling once you have that amount of pattern recognition skills and you've practiced enough. So yeah, every investor I speak to who has 15, 20 years of experience tells me that they go with their gut feeling. And I'm like, yeah, that's because you've met thousands and thousands of founders during this time. So your gut is very well trained at this point.
Yeah, no, there's definitely, it makes sense and reasonable that if you've done it several times, there's some sort of like polishment and refinement from that of the process.
Yeah.
Yeah. What verticals in crypto are you looking at today from an investment perspective?
Yeah. So I'm very excited about, I mean, obviously all of us have been excited about stables for a while, but I think for a year and a half now, I've been saying that there would be a strong wave of stables, not just in terms of demand for existing stables, but rails. So stablecoin rails is a very important, exciting area. Kind of overlapping with that a little bit is payments in emerging markets, as well as the demand for dollar, etc., is also very fascinating. Anything to do with decentralizing infrastructure, where the unit economics beats out the distribution infrastructure unit economics. That's very exciting to me as well. RWAs, asset tokenization. I work very closely with a large number of LPs. So, of course, they all run financial institutions that go into like multi-trillion-dollar AUMs. And I know the kind of appetite for fund tokenization and RWAs that exists on that side. Fascinating. And then there's like a consumer side to RWAs as well, solving for the age-old problem of real estate ownership, etc., which is also very interesting. Honestly, I can go on. I think you'll need to stop me as to what are the areas I'm excited by, but there's just so much potential. Like identity, for example, I'm supremely excited by. I'm actually working on a blog piece on identity right now, which basically will help you as a human being. It will capture your identity and make it extremely scalable. So basically WorldCoin at scale. Love the company, love the team as well. And yeah, working with them to flesh out this thesis.
Awesome. All right, a little bit on the technical side here. So the U.S. markets are pricing in an additional rate cut in 2025 on the back of the two we had earlier this quarter. Broad strokes, how would this data affect your investment outlook into 2025 or strategy? Mm-hmm. And we saw strong VC numbers in crypto, I want to say Q2, Q3 of this year.
Yeah.
Do you think that's going to continue into 25, especially with the presidential elections in the U.S. Being viewed as a catalyst? I wouldn't say softening regulation, but probably more understanding approach from the regulatory aspect globally. Yeah, would love to hear your thoughts.
That's the way I see it. That's 3 questions. So one would be on the rate cuts piece. Let me just explain how crypto LPs think as well. So the same kind of LPs who would invest in our fund would also invest in a crypto native fund. Their expectations from the crypto native fund would be very different than our fund. With our fund, they would want us to keep the money for a longer period of time and generate multi-fold returns, generate a high quality of DPI over a period of 10, 12 years. With crypto VCs, the same LP would have a different outlook, which is we are giving you money for a year, maybe year and a half. We want liquid DPI 2x, 2.5x during that time. And we want to do that churn every year, every 18 months, every 24 months. So it's a very different expectation. So the way that's why you see a huge amount of VC influx into investing in crypto tokens. I would say crypto tokens, not blockchain companies, two very different things. So the demand for crypto tokens go up from a venture funding point of view because rates get cut. The same LPs who have like a diversified asset, like portfolio of assets, would see it as, oh, there is no that much big benefit of holding like T-bills versus, let's say, maybe allocate an extra 1% of our portfolio into crypto funds. The crypto funds get that like influx of capital from their LPs, and then they have a timeline during which they have to deploy and make money, which is why you see so much venture funding come in whenever rates get cut or whenever crypto markets start outperforming. Either of the two can be pivotal inflection points for crypto VCs to start leaning in further and further. So that's like the one piece where I feel that we are immune to that, because in an extremely bear market with very high interest rates, as a fund, because our fund philosophy and our LP relationships are different, we can invest massive checks in blockchain companies as well. And you would hardly see us trading crypto because we are not in the 1 year, 2 year business. We are in the 10 year, 20 year business. For context, I mean, Wise, like we mentioned, we've been investors for close to 20 years. We are still investors in Wise, even though it's a public company. We refuse to sell because we still believe there's potential for the company to go multifold from here as well. Disclaimer, not a stock advice, but yeah, take it as you feel it. And the other question that you asked was on the regulatory piece. I think Fit 21 and like honestly Trump's agenda while getting elected, all of these things are baby steps in the right direction. But at the same time, at the end of the day, we need to ensure that we're educating regulators on the differences between blockchain and crypto token trading and the mimetic trading volumes that go up whenever crypto, like Bitcoin, goes up or whenever crypto markets start getting pumped, is not symbolic of what the industry is capable of. And that blockchain as a technology can move industries, can move the world, can move mountains, and truly build a holistic, trustful, compliant, safe environment. While these three words today doesn't really seem to resonate with anybody who hears the word crypto. So that's something, I think that's like the relationship that we need to change. And we try to work very closely with the UK regulators as well. And that's the efforts that we are making to ensure that decentralization as an ethos is embedded, which what Chris Dixon says it beautifully, that Web3 combines the ethos of Web1, which was decentralization, with the money-making capabilities of Web2, which was the startup founder era of building things. So it's Web3 is a beautiful thing. And I just feel like 99% of the users today have spoiled the industry.
On that note, we're going to just come to a close here. And this has been very insightful, Ash. I'm definitely sure we're going to have you back on as a member of the family. I think it'd be always good to hear your view and sort of educate our viewers to what you're seeing from your seat. Thank you so much for coming on the show.
Benga, thank you so much for having me, and always happy to be part of the WAGMI family.
Sounds good. Talk to you soon.
Take care. Bye-bye.
Hey, everybody. Thanks for listening. If you enjoyed the episode, go ahead and give us a good 5-star rating and subscribe wherever you're getting your podcasts so you can get all the latest conversations from the most interesting founders, builders, and investors from across the world. Thanks so much, and have a good one.